Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.
Welcome back to Kitco News. On location at the New Orleans Investment Conference, I'm Jeremy Szafron. Looking at the market, you'd never know the economy is in trouble, but my next guest says the bankruptcy cycle is still ramping up and data revisions are telling us that the recession has already started. Here to help us wrap our minds around this and to see what's beneath the surface is one of our Kitco fan favorites, Danielle DiMartino Booth. Danielle, of course, is the CEO and Chief Strategist for QI Research. Great to see you, Danielle.
I'm really happy to be here this morning.
It's an interesting time, Danielle. Since the last time I talked to you, we have a new president who's already been in there, and we also have some pretty wild data coming from the Fed, coming out of the economy right now. Let's get into this first, okay? And bear with me because I have to read it. It's quite data intensive. We know that in October, hiring advanced at its slowest pace since 2020. Non-farm payroll increasing by just 12,000 jobs. 12,000 jobs, of course, below expectations. And, the past 2 months was weaker than initially reported as well. So talk to me a little bit about the background here. We know that revisions happen all the time, but is this the new norm?
Well, we have seen quite the string of downward revisions. In fact, I prefer to look at the job market through the prism of the private sector because we've had such a dominant creation of jobs on the government side. But I like to look at what the private sector is doing because that really reflects the economy. Mm-hmm. And what we've seen is in October for that 12,000 headline print, we actually lost 28,000 jobs in the private sector. And you're right, revisions have become systematic in nature. They've been going on since 2022. January of 2022 is when we first saw a negative revision to private payrolls, and it hasn't been broken. Right. So more importantly, the longer something goes on, the higher the probability it's going to end. So we actually might be getting towards the end of these downward revisions. What's important, though, are the annual numbers, the annual revisions that we've seen. On Wednesday of this week, we saw the quarterly census of employment and wages come out. And we know that instead of 2.5 million jobs created, it was 1.25. And focusing on the private sector, in the year ended June 30, 2024, and that's the period that these revisions covered, it wasn't 2.3 million jobs in the private sector that were created, it was 737,000. And what that tells us, because we only have this preliminary annual figure, is that it's likely that private sector job destruction began a lot earlier than October, and in fact probably began early in 2024. So we're going to see these revisions continue to come out that effectively rewrite history, but also tell most Americans that they weren't imagining the recession that they continued to say was ongoing, that it actually happened, but only with the benefit of hindsight are we finding out what that real data is.
Yeah, you talk about the government numbers and then the private sector. It's almost like that Main Street, Wall Street divide that we continue to see. If you got $100,000 in the bank, you're not worried about the price of bananas, but everyone's hurting. We saw this with the election. So what is the real health of the economy right now?
I think again that when we look back at the data that is going to be released, and I mean it's not a matter of my opinion. We know that most government statisticians are very left-leaning in nature, and that might have been one of the reasons that we haven't seen the bad data come out. But we know going forward that they're going to be much more amenable to letting the negative data taint the Trump administration. So we'll see an increasing amount of negative data come out now that Trump has been elected. And I think we're going to realize that we are in recession. That actually gets us to the next question, is when we're going to come out of it.
Yeah. When are we going to come out of it?
Well, I mean, your average recession lasts about 11 months. And it looks like April was the tipping point that we really turned negative on job creation. And therefore, this time next year, we should be out of recession. And I think that's what Scott Bessent and others who are going to be at the helm of this new administration's economy have to be focused on is, when do we get out of recession? Yeah, and I think that they should be looking towards that.
I want to get into Bessie because there was an announcement obviously made, but I just want to talk to you a little bit about these deteriorating numbers because we have layoffs. I mean, when I saw you last time in Boca Raton, you talked about this Musk effect. Now he's created Doge. this Department of Government Efficiency. You know, we're hearing mass layoffs at companies like Nissan, Boeing, Citigroup, but then we have these little employees that are doing smaller scale and kind of hiding their layoffs.
Yes, I tweeted out attritions equal revisions. You had Verizon, for example, come out and say, "Oh, we're going to take a $2.9 billion severance charge," and you're like, "Wait a minute, Verizon, you never announced layoffs to begin with." "Oh, well, that's because 4,800 employees left by attrition." And we're starting to see increasing numbers of these announcements. And a lot of it, if you're in the position of Joe Q, CEO, Jane Q, CFO, the optics of announcing layoffs are toxic. So you just rather quietly have it be as a footnote in your earnings release.
Do you think that we can Musk the government?
I think that if he is allowed to come in, and again, you know, every president since Nixon has made similar promises coming through the front door and not succeeded. So we'll have to wait and see what the Constitution, the Supreme Court, and Congress have to say about Musk's ability. But I will say this much. He has come in, and there was a good op-ed in the Wall Street Journal that he co-authored with Vivek a few days ago. They're starting with constitutional attorneys. So they're starting with the approach of, if this is going to be disputed, we want to come in with something that's going to stand up to the Constitution and make its way through the Supreme Court and prevail. So he really is, Musk is coming at this from a very intelligent angle, anticipating the fight on the backside of this in order to potentially unwind a lot of executive orders that overreached to begin with and gave these federal agencies way too much power to wield. And on behalf of U.S. taxpayers, I hope he does succeed.
Yeah. I mean, you know, it's interesting because when you talk to a lot of analysts, they say, okay, well, we got 36 trillion in debt. Maybe he can wipe away 600 billion. But do you think it's going to be as substantial, or is it more about getting rid of red tape and regulations at this point?
I think that is more the aim here. And I think $2 trillion, I think a $2 trillion cut in spending is, I mean, it would be very difficult to do. But on the other hand, when you hear some of the, I'm going to go after this, I'm going to go after that, why do we have one of the largest lobbyists in the country setting Medicare prices? I mean, I said it on TV a few days ago, you've let the fox into the hen house.
Yeah, 100%.
It makes absolutely no sense that the market shouldn't be deciding what these prices are. And that would explain, you know, the United States shouldn't be spending more than $12,000 per capita versus other developed nations spending $6,000. Clearly, there is waste to go after, and it's easy to identify. So again, if he's allowed to do this, if the special interests don't lose their minds and force Congress to intervene, we might actually see things get done, and there's a higher probability of that because of the red sweep.
I want to talk to you a little bit about the bankruptcies, because we're seeing and keeping an eye on corporate bankruptcies in the U.S. They're surging. I mean, 63 corporate bankruptcy filings were recorded in August, up from 49 in July. We look at the same thing on the personal side on debt. There's delinquencies, credit card debt.
Oh, gosh.
What's the issue here?
Well, the government handed out money like candy, and then that ran out. I mean, it's pretty basic. Yeah. You know, we've seen in the month of November, and things will obviously slow down into the holiday, into the Thanksgiving holiday, but we've seen 19 bankruptcies of companies with 50 million or more in liabilities. 19. You know, the post-pandemic high was 23. But to get to a run rate like what we're seeing currently takes us back to the great financial crisis. And we're seeing small bankruptcies as well. And now it's filtering through into personal bankruptcies as U.S. households just have too much credit card, auto, personal loans, to say nothing of the mortgages that they have.
Right. But there had to have been warning signs. I mean, people like...
We've been watching these delinquencies tick up quarter after quarter after quarter after quarter, and now you're seeing the rejection rates when American consumers go to try and get fresh debt, whether it be a credit card or an automobile or refinancing their mortgage. We're seeing the highest levels of rejection rates on record.
Yeah, 2025 is obviously going to turn out to be an interesting one. We're in the in-between right now. We just talked about whether or not we're in a recession for, is it technical recession or is it a personal recession? I mean, it feels like we're not in a good place here.
No. And I think that, again, I think that when the National Bureau of Economic Research goes to set the date on the recession, on average, they wait about 10 or 11 months until after the recession has started to call it. I think that they're going to say it was an April 2024 event.
How's the Fed going to respond? I mean, obviously we have the upcoming FOMC
Well,
meeting.
that's the thing. What people don't appreciate, while the market is pricing out future rate cuts, the statisticians at the Federal Reserve are losing their mind because they pay attention to these arcane revisions that come out because they have to. It completely destroys their spreadsheets. They have to go back and put the math in, and they'll be saying, especially to the incoming doves who are going to be voting on the Federal Open Market Committee, we have to continue lowering interest rates.
So cuts coming.
Cuts are coming.
Cuts are coming. We saw that little impactful news conference by Jerome Powell when he was asked if he could be fired. He said no, legally. We know that he's in there till 2026. What's the future of the Fed look like this year?
Well, according to Scott Bessent, he can put a puppet in to be a shadow Fed chair. I don't know where Bessent intends to put this person because the first opening on the Federal Reserve Board is in January of 2026. So you got a long runway between now and more than a year from now before he can even maneuver that. So I think we've got Powell.
Yeah.
I think Powell's going to keep running the show for a while here.
Give the audience a little bit about this background behind Bessent. I mean, he was in charge of Soros Fund in terms of the investment for quite a while. Were you surprised by the choice?
In that sense, yes. Yeah. Because you would have thought that it might have come from a Democratic president. But I actually think that Bessent is a more independent choice and probably shouldn't be painted just because of the role that he played for the Soros Foundation. And I watched a recent, very long-form interview with him, and what most people want to know is the damage that tariffs could do ... immediately.
Right.
Bessent has laid out a blueprint to say, if you're an American manufacturer, I'm going to give you 2 years to friendshore, nearshore, onshore. And if after 2 years you refuse to leave our sovereign enemy, our sovereign economic enemy, China, well, then out comes the stick. But first I'm going to give you a carrot to bring manufacturing closer to home and give you the necessary time. You can't build a factory overnight. Mm-hmm. You need time to do so. And Bessent has very thoughtfully laid out a plan to give companies enough time to do that. Yeah. That means that we're not going to have overnight inflationary tariffs.
That's great. So, I mean, was it more, mainstream media was almost scaring people with this type of information, as we know. So what's the goal here? I mean, you feel...
Well, Bessent has said, order of business number one is extending those tax cuts. Extending tax cuts, extending the status quo won't be inflationary.
Right.
It'll just be status quo. So in that sense, I think that there's a lot less of an inflationary impulse initially than, again, the scaremongering that we've seen in the media. Yeah. That's all it is scaremongering.
Yeah, that's it. I mean, we saw it with the election as well, and here we are. Okay, well, I need to get to your macro outlook for the growth for next year. I mean, the economy is in an interesting spot right now. Are you feeling better about it and where we're going?
Again, I think that if we are saying that the average recession only lasts about a year, and we're seeing bankruptcies running as fast as we are, we could be right now in the heat of recession. Therefore, I'm hoping that the U.S. economy comes out of recession in 2025 and that this time next year we can look back and say it's over. Yeah. And we'll know that when we stop seeing the bankruptcies. We'll know that when we stop having companies announce in their earnings releases, we just lost 5,000 employees. We'll know that when the layoff announcements become hiring announcements. And that is why I think it's so critical to follow real-time announcements to see what's happening in the economy today. We have to get through the lag effect of shelter inflation. Now we're at the peak of that. Now we've got to get through shelter disinflation. And the Cleveland Fed rent index tells us that we've got a good 12 months to go before we see disinflation halt in shelter.
How many homes are on the market?
We've got more spec homes on the market than any time since 2009, 2010. We have a half-century high in apartment supply, and there's no abating that. And we're just now starting to see home builders pull back. And now we'll see the lag effect of that, which could extend the length of the recession, because now we'll see construction employment start to come down.
I got to ask you about this divergence between the U.S. economy and the global economy.
Oh, gosh.
We just saw the ECB come out with a report. The euro, where are we going?
Well, it doesn't look like up.
No.
It does not look like up. And in fact, when you looked at the manufacturing sectors, when you see announcements out of Bosch and Volkswagen and some of the largest employers in Europe, I mean, and this is in an area where it's hard to lay people off. I mean, their labor laws are much stricter than that of the United States, and yet they're pushing forward. Why? Because their bankruptcy cycles are in full steam. And so Europe has acknowledged that it's in recession. And to presuppose that the United States is on an island, I think is naive at best.
Yeah, but how would we just keep printing money? I mean, what are we doing here?
Well, we're not printing money, right? The Fed is, and that's what, with deference to the panelists that I just came off stage
Very
with.
lively discussion, by the way.
Very lively discussion, but they're like, we'll just do QE. And I'm like, we're not even finished shrinking the balance sheet yet. I think this is a little bit premature, this discussion that we're having. And central bankers are central bankers. I mean, Bessent, he can take it to the Supreme Court to try and have autonomy over the Federal Reserve, but right now the law does not stand for that. Right. And as long as the Fed remains independent, and the Supreme Court would have to overrule that, or Congress would have to rewrite the Federal Reserve Act, as long as that's the case, central bankers get to the zero bound before they launch QE. And we're nowhere near that.
What are your thoughts on this debt loop that we're in? I mean, we had $1 trillion since July to this deficit. I mean, how do we get out of it? Cynthia Loomis, the Wyoming governor, wants a Bitcoin reserve. You got to give it to me. What do you think?
Yeah.
By selling gold, by the way.
Okay, that's just crazy land.
Yeah. But it's got a lot of attention. I mean, I can't believe how viral it's
got a lot of attention. There are a lot of politicians that are jumping on board. And that actually brings us to the next thing. Yeah. Let the politicians in to run something, typically it falls apart.
So it's not going to happen?
I don't think so.
So we're not selling our $42 an ounce gold?
No.
Yeah.
No, we're not.
How does this narrative keep going?
Because it's popular.
Yeah.
Because the media likes it, and politicians like what the media likes, and it's a very circular thing. But until you have the government hand money out to people directly, until you get back to that point, if it's just more pork barrel spending and it's got all these red strings attached to it, you're not going to see inflation. When you start giving money to people, which we did with the child tax credit being in cash and all the stimulus checks and emergency unemployment benefits, all of the candy that was given out with the CARES Act, that created double-digit inflation. When you directly deposit money into American household bank accounts again, then you'll get inflation. Until then, it's just deficit spending. Trump has actually come out and said no to student loan bailouts. So now, as of December 31, 2024, now you're going to have millions and millions of people reported to credit rating agencies. So banks are going to clamp down harder on their lending standards. There'll be calls for fiscal stimulus of the pandemic sort, giving money to the people before all is said and done. There'll be howls and worries among Republicans that they're going to lose in the midterms if they don't hand out more money like candy. So we're having the wrong discussion.
Right.
We're having the wrong discussion. It has to do with the transmission mechanism of fiscal spending. Extending a tax cut is nothing like saying, here's $3,000 per month to a family because you have children, in the form of which is spent overnight, and then you get inflation.
You know, for the viewers that aren't at the show, you were just up there with Adam Taggart, I think Peter Schiff. I mean, you had quite a lively discussion. A lot of gold bugs, a lot of Bitcoin bugs. I saw you retweeted on X that the corporations attempting to buy Bitcoin right now are resembling the Hunt brothers on steroids. Remind our viewers what happened in the silver market with the Hunt viewers, and do you agree?
It ended very badly, and the idea was to have, like a Pied Piper, a huge following into the trade and hopefully sell before the bottom falls out.
Is that what's happening with MicroStrategy?
I would ask the individuals at Citron Research that have just set up a massive short position in order to hedge their Bitcoin position.
Right.
They've set up a short position in MicroStrategy stock, which caused it to gap down, and it was not pretty. But it was the reason that they did it, because they've ridden this wave in Bitcoin, and they took a short position out on MicroStrategy to hedge that. That means they're worried.
Are you looking at it as you're not looking at Bitcoin as, fiat at this point? I mean, the discussion on stage was everybody should have Bitcoin in their asset list and gold and U.S. cash.
You can own Bitcoin because it's got just about a perfect correlation with the raciest. You can own Bitcoin or you can own Nvidia.
Yeah.
Take your choice.
Yeah, well
but it's a speculative instrument, and until it stops behaving like one, until it is stable, and it's anything but stable. My God, it's on steroids.
Yeah.
So until it's stable, I think that having the discussion about it being a store of value is asinine. Sorry, that was a technical term.
Okay, I need to ask you the 3 biggest risks that you're going into next year, keeping the closest eye on, Danielle.
So I think the recognition of recession, again, I'm not making it up.
Yeah.
We know that most government bureaucrats are left-leaning, and they cannot wait to let this data come out of the gates of hell. So I think the recognition of recession and how the markets reply to that, how the Federal Reserve responds to that when they're going to be attacked politically is of huge import going into next year. And how the recognition of deflation as it works through the housing market, how that's going to affect the average American household and what the government's going to have the capacity to do about it. So there's a lot of moving pieces, but right now what's happening fiscally, huge risk, monetarily, huge risk, and in the U.S. household, huge risk.
So then the question is for the audience, what are you investing in during that time?
I think you have to be defensively postured. Okay. Somebody did the math looking back at the entire history of the stock market. There's 1.1% of time in the whole history of the stock market that it's been this expensive, measuring it by standard deviations away from its fair value. You can be there for the last 1.1%, or you can be very defensively postured in companies that are going to continue to pay their dividend no matter what happens in the rest of the world, as well as collecting money on T-bills. Own your gold, have safe bonds, be defensively postured in this environment.
You brought up gold, your quick outlook for 2025 on the gold price?
I think that you might not certainly have the run that you had up to the election, but I think that it will be I think it's going to be a logical place to have your diversification in defensive
interestingly said.
positions.
Yeah, appreciate your time. Danielle DiMartino Booth,
Thank you for
of
having
course,
me.
joining us here at Kitco News. We always appreciate your time. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We're coming to you from the New Orleans Investment Conference, where we're going to have great guests all week long, so stay tuned, hit the subscribe button, and we'll see you next time.
Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.